Alright, so in this video we're going to talk about stocks or equity breakdown in a portfolio. So I've listed here how I would set up kind of my Excel sheet, or how I would keep track of my portfolio holdings when it comes to my equity allocation. So the two biggest differences we need to keep in mind here are domestic and international stocks. As you might guess, really the biggest difference between that is where the company is headquartered. So in Atlanta, Georgia, you might have Coca-Cola. That would be considered, if you're a U.S. investor, that would be considered a domestic company. Mercedes-Benz would be considered a German company. In terms of the differences, like large, mid, small sector, you're obviously going to have different size companies in every country, in every market. But for the purposes of an investor gaining exposure, this is kind of how I set things up. And a lot of that has to do with ease of trading, access to markets, things like that. So I'll explain further in the video. But let's jump in. So large cap companies, those are going to be companies that have a market cap higher than $10 billion. That could be a company like Apple or Amazon that's over $1 trillion, or it could be, I say smaller, but still a massive company. It could be a smaller company that's worth $50 billion. Those would both be considered large cap companies. Mid cap, so any company that has a market cap between $2 billion and $10 billion is going to fall within the mid cap range. Small cap are going to be made up of companies that are less than $2 billion. Now this is important to keep in mind. At some point every company starts off as a small cap. And what happens is, as these companies grow, they might, there might be a company in a small cap fund, in a small cap mutual fund or ETF, and as it grows, it might then become a mid cap stock. And so any small cap ETF or mutual fund would sell, if it's a small cap fund, would sell that company out because it doesn't meet the criteria, and then it might become a mid cap company. Well, as it continues to grow, it then might grow out of that classification and become a large cap company, etc. So this is not always true, but you do see a lot of companies kind of go through this process, and they'll start off in small cap, then they'll go to mid cap, then they'll go to large cap. And you can see that through the life cycle of a company. Sector. So we've created a video on sectors. If you haven't watched that yet, I encourage you to do that. But for the purposes of breaking down our portfolio, we allocate money this way. So within sector, you're going to have small cap, mid cap, large cap. It's just kind of a more acute distinction that gets you exposure to certain things or certain variables. We spoke a little bit about international, but the differences here and here are simply going to be where they are. So domestic sectors are going to be companies that are domiciled domestically, and then companies in international sectors are going to be companies that are abroad, international, domiciled in international countries. Core, this is an interesting, I have it in one category. It seems, as I explain this, you might think, okay, that's pretty broad for one category, but I consider core international really any company outside the country that's not a specific sector. I don't get into these other more granular details like large cap, mid cap, small cap, etc. A lot of that has to do with, and this is changing as technology progresses, but a lot of that has to do with how expensive, time consuming, and difficult it is to keep up with and trade international stocks or equities. Rather, a better approach that I've found, especially for someone who is maybe not allocating as much time to this, is to break it down into just mutual funds and ETFs in specific regions. So maybe you own a core ETF or a core mutual fund for developed Europe. So you might own, the largest companies throughout, the UK, Germany, France, and other developed European countries. You might own a Latin American ETF or mutual fund, which is made up of companies throughout Latin America. Maybe you own a Asian ETF or mutual fund, and it could be emerging Asia, it could be developed Asia, something else, and this is quite fascinating. You can kind of slice up and dice up these as you please, but a very popular ETF for core international is what's called EPP. EPP, and that is developed Asia ex Japan. So it's going to be companies that are in developed Asian countries minus Japan. So there's all sorts of, it's really actually quite fascinating, but there's all sorts of different funds out there that you can invest in. So as I said, this is very much kind of a surface level discussion, but all these terms are very important to build a foundation as we move further into developing out a portfolio and really understanding stocks and equities. And one more thing on the international piece, another reason for kind of keeping it a little more simple. What I've found, and I travel a lot for those of you that don't know, but if you're not in a country, if you're not in a region, even with the internet and with, as freely flowing as information is, it's still very difficult to keep up with what's going on in a country or in a region if you're not there. There's just so much news, there's so many headlines, there's just so much going on in our world, so much data. It's very difficult to keep up with it. So that's really, a simple reason as to why I recommend, keeping a more simple international allocation. And that's why I've gone into much more detail on the domestic side and less detail on the international side. So I hope that helps.